Live. Everywhere. On netrootsradio.com. David Waldman. Kagro. In the morning. Now, here's David Waldman.
Hey, good morning, everybody. How you doing? It's Tuesday. I can't believe it. Yesterday I said it was Tuesday, too, but today it actually is Tuesday. Tuesday, September 2nd, 2025. Time for another show. Time to admit that Donald Trump, I think, might still be alive. I don't know. That was the excitement over the weekend. I was so excited that I couldn't bring you a show on Monday. I wanted to just sit and watch my feed to see if Blue Sky told me that Trump had died at any point. But actually, it was Labor Day, as you know, and we very frequently will take those kinds of holidays off. Why would you labor on a day when you're meant to take off from your labor? It's not really labor doing this show. Not in the sense that we're talking about here. But, we labor at it at any rate, and we spell it right, too, by the way. Not the point that Justice was trying to make to me in the aside that he whispers on the way in to the program. There is no you. In America, there is no you in labor. Okay. Yes, right, true. That's definitely true, at least in our spelling of it. But, team, stronger together. You know how it goes. Well, how was your Labor Day? Did you think Trump had died? Were you laboring at trying to get over it when you found out that it might not be true? It may still be true. It was the most extraordinary thing. From Friday on, everybody was talking about it because Trump had been largely out of the public eye. No public appearances or public events or whatever. I think since last Wednesday through today. Today he's got a 2 p.m. major announcement, which may or may not have been driven by a long weekend's worth of rumors that he had died. But, everybody keeping a close eye on his health, the bruising on his hands, the swelling of his ankles, the shuffling as he makes it 20 feet or so out the door to the limo, and allegedly goes to play golf where nobody sees him play golf. I mean, the press has never been able to follow him playing golf, really. They actually, as it turns out, they stick him in the tennis pavilion at Lowe's Island, or Trump National, as they call it now, which I guess means you can't play tennis or golf, at least indoor tennis, while the president is there, and probably can't do anything while the president is there. Anyway, so the press never gets to watch him play, and, rampant speculation. Maybe they've set up a medical facility there so that he can receive treatment without anybody seeing, although you would think they could set that facility up at the White House, but who knows? I don't know what to tell you. It's been a wild ride. And everybody's speculating about, how long he's got left. And it can't be long. He's just not in good health. Although he does say, he texts on his Truth Social that he's never been in better shape in his life, which is a ridiculous thing to say. Might as well just claim to have, as I was saying this morning, in the Trump style. In fact, not only is he in the best shape of his life, but that shape is even longer than it used to be. That is, he's now 6'5". But really maybe 6'6" if you think about it. He's been cheated out of an inch or two by the crooked, horrible, corrupt media. Sure, whatever, man. Okay, so we can't spend a great deal of time on that because he's, there's no reporting that he's actually dead. So what can you do? We're stuck saying that some people say that he's dead, but some people are saying a lot of things. It's been kind of crazy. All right. Well, let's catch up with what's gone on over the weekend. Here's a story. I want to go and see if I can find a report of it elsewhere. I see it being bandied about, but it's a Boston Globe piece, and they have a fairly robust paywall. And, I don't live in Boston. I'm not a subscriber there. But I did see somebody pointing out here, who's Jonathan Cohn, who's pointed this out. Political director for Progressive Mass, so probably is a Boston Globe subscriber, who points out the perfect encapsulation. We've mentioned this story, but I didn't put a name. Well, I probably read the story and put a name to it back then, but I haven't been watching this guy. But perfect encapsulation of the Trump administration. The guy suing Harvard for alleged anti-Semitism is a straight-up Hitler-admiring Nazi. So, I know anti-Semitism when I see it, and that's Harvard, sure. And he fought his way all the way through Harvard. But we may have mentioned this guy in the context of his having been hired on by the Justice Department to pursue a lawsuit against Harvard. I don't know whether he was the one suing about not being named editor of the law review, or having to struggle, to be admitted to the law school. I don't remember what exactly his conf was, but apparently an avid reader of Mein Kampf as well. And I guess the big news is that the headline tells us a DOJ lawyer accused Harvard of indifference to anti-Semitism, which I'm sure he would have thought was a great thing at the time. As a Harvard undergrad, he wrote a paper from Hitler's perspective, and apparently also once told a peer that Mein Kampf was among his favorite recent reads. And bit of a beardo here as we take a look at the picture. And I don't know what he's doing in this photo, but giving a sort of commencement address or something. But as I recall, the story was that this guy was not given a Nobel Prize for geniusness at Harvard, and he's very angry, and he thinks it had something to do with either anti-Semitism, though he's not Jewish, or anti-Semitism, and the reason they didn't give it to him was he was a Nazi, and he's going to sue them. So his first job out of college is being hired by the DOJ to sue the place that gave him his law degree. It's hard to understand. But Michael Velchik is his name, and maybe I was going to see if I could summon something up via Google before the show, but it got a little crazy beforehand, and then maybe we can grab something. Oh, it looks like he chucked the beard when he got hired out of college, but somehow, let's take a look at that. That's interesting. Here's his LinkedIn page. That should be that could be interesting. Oh, am I not logged into LinkedIn on this computer just as well? At any rate, but it was basically graduated from Harvard Law School, and now I'm senior counsel at the DOJ, which usually you got to do 20, 30 years before you get to that stage. But we're governed by remarkable wunderkinds at every turn. All right, let's see if I can get that search back. Anybody going to give me something from out of the news besides the Boston Globe? I don't know. That's the most recent reporting on it, and I guess I won't be able to get past that paywall unless we subscribe. So what can you do? Everybody can go send money for subscriptions to Boston Globe, I suppose. But it reminds me of another story I saw being traded frantically this morning, which I also put aside. And I think I've got something from it from a listener who tipped us off on this. Yeah, there it is. Where did this come from? Let me see if I can go back to my own. There we are. Yes. So, I haven't got permission necessarily. I always need to ask for crediting people by name for their submissions. There are a few people that I think will give me a pass, but we'll say James. Thank you, James. And then you can send me a note if it's okay for me to tell everybody what your legal name is so that you can be doxed and swatted. I don't think that's ever happened to anybody as a result of having your name revealed on this show. But thank you, James, for sending me this story. And then this morning, I saw it written up in Talking Points memo. Josh Marshall, I suppose it's possible that James has sent it to both of us and said, hey, what's up with this? But it's unfair. I had to wait until this morning to react to it, and Josh got it last night and was able to write something up on it. He had a head start because he can publish it anytime. What's the story? Another American conservative wunderkind who graduated college recently and now is in charge of something amazing. But an interesting angle on the tariffs. So I guess by way of background on this one, we'll say that the controversial tariffs, to say the least, also got a lot of attention over the weekend as yet another courtroom ruling against their legality has come down. The U.S. tax court has ruled on them. I don't know whether this is an appeal from the tax court, and that too is probably parked somewhere in Instapaper, but it might be buried at this point because, it came prior to all of the crazed speculation over the weekend. And there's a lot of, by the way, it is Tuesday, and although Joan McCarter not with us today, there's a lot of congressional procedure to catch up on as well. But, yeah, I don't know. It's not presenting itself immediately, although who knows what it's buried under, the tariffs ruling. But I will get to the ruling behind it. But at any rate, the word from Wired magazine is, Wired published this quite some time ago, July 21st, and it hasn't gotten very much attention, but that's the article that James sent me. But I see today Josh Marshall responding to that Wired piece in a way that, well, one, we might actually be able to read. That's one thing. I have technically a subscription to Wired, which sometimes decides not to work, but it looks like it might work today. So maybe, this says, this is my last free article. All I have to do is subscribe or sign in, but I have done that 100 times, and they're not real good with allowing me to stay signed in. Try this again. But if I can't read it to you, I can always read you Josh Marshall's discussion of the article, although it's unfair because what James asked for was my reaction, not Josh Marshall's reaction. So what's going on? Well, Trump's Commerce Secretary, as we know, loves tariffs, Howard Lutnick, and I got the article now. His former investment bank is taking bets against them. So this is good background and also brings up an issue that was actually exercising Josh Marshall about it, and with good reason. A subsidiary of Cantor Fitzgerald, which is run by the sons of U.S. Commerce Secretary Howard Lutnick, is letting clients essentially bet that Donald Trump's tariffs will be struck down in court. It's actually quite ingenious. This is the way it is on Wall Street. You come up with these things all the time, and everything on Wall Street is betting. And Josh's point seemed to be in his review of things. It feels dirty and weird in many ways, but this is essentially what Wall Street does, is that they make and take bets against all sorts of things. It's legalized gambling in one way or another, but there's white tie dressed up securities involved usually. And somehow that kind of betting is okay. Sometimes from time to time you legalize things and everything is okay. Well, once you legalize sports betting, it became a bazillion-dollar industry. So what they're doing essentially is they're saying, if you've been hit by tariffs and you've got these tremendous expenses, or you're anticipating tremendous expenses from tariffs, because it's a little unclear whether there really are a lot of expenses from tariffs yet or not. As a matter of fact, Justin Wolfers, once again, coming through with this over the weekend, pointing out that Trump at some point has announced to people that his tariffs have taken in $8 trillion for our great country since they began. Now, that's an awful lot of money. Wolfers isn't actually addressing that. He just straight up says, well, no, the actual number is something more in the neighborhood of $115 billion, which sounds like, well, gee whiz, $115 billion is a lot of money. It is, but compared to $8 trillion, it is not. He put it in pie chart form to illustrate exactly how not $8 trillion it is. Remember, of course, that $115 billion is, it's 11.5% of $1 trillion, right? So if you're talking about 8 trillion. What's 1/8 of 11.5%? You know what? It gets pretty small. So on a pie chart, it's well illustrated. We also saw somebody else say, back when Dodgy and Elon Musk was claiming, when they were claiming we were going to have $2 trillion. Everyone's into the trillions these days. $2 trillion in savings from Dodgy's operations. And then, of course, it turned out to be not any savings at all, but in fact costs. But even then, they were paring back the estimates of how much they were going to save. They went immediately from 2 trillion. Well, really 1 trillion. Well, really 150 billion. And then people pointing out the difference between $150 billion and $2 trillion is about $2 trillion. There's really nothing at all compared to $2 trillion. And similarly, nothing at all by comparison to $8 trillion. However, if it had been $8 trillion, and although I think they will use this in their defense by saying, see, I told you weren't paying the tariffs. We know where tariffs come from. We know who pays the tariffs. $8 trillion is, if you do the math, real quick, $24,000 plus, over $24,000 for every person in America, going by the 330 million figure that we have for population. Or, every family of 4, for instance, would be paying about $96,000 to $100,000 in tariffs since, I guess, January, February. Have you noticed? Have you been paying out $100,000 extra? Do you have $100,000 extra for tariffs to pay? No, probably not. Which tells you one of two things. As Trump would have it, it tells you, I told you weren't paying the tariffs. China and other terrible countries are paying the tariffs. No, that's not the case. It's just you haven't collected anything near $8 trillion. And you should probably be a little bit more honest about that. What's the math offhand on what Wolfers put the figure at? I'm just curious, and now I got to get the calculator out, and we'll see whether it's the kind of figure that you would have noticed. And not all of it will have been passed on to consumers yet, of course, whether it's 8 trillion or anything else. 115, there's 115 million, 3 more for 115 billion, divided by 330 million of us. Is about just under $350 per person, which you probably would have noticed as well. But like we said, it hasn't all necessarily reached the consumer pocket just yet. It's possible, though, that in higher prices. Could I have paid $350 more at the grocery store than I would have a year ago in the first 7 months of the administration? Sure. I think that's easily possible. Anyway, just thought that was interesting. So the tariffs themselves, of course, are highly questionable, et cetera, et cetera. And so what they're doing on Wall Street is saying, well, if they got struck down, maybe we could find some way of making some money out of this. They are approaching, I guess, people who either have been hit or are anticipating these big hits in tariff costs and saying, well, it actually sounds like a good deal to the merchants, the importers, I guess, right? If you say, look, you're looking at getting hit with $1 million worth of tariffs this year, let's say, or whatever. I'll tell you what, I'll pay you $250,000, $250 million right now, cash, to help you get through this, in exchange for you signing over the rights to me. If those tariffs are ever declared illegal and there are rebates paid from the Treasury, you give those to me. But you're buying them at 20 to 30 cents on the dollar. So it probably sounded like a pretty good thing, right? I'm getting hit with all these tariffs. It's a quick infusion of cash. And, given the way it is in this administration and the way this Supreme Court is with this president, I'm never going to get those rebates. So maybe this is a good idea. It's just a straight up foolish bet for Cantor Fitzgerald, except the thing is, Cantor Fitzgerald is Howard Lutnick's firm, essentially. Yeah, sure, his sons are running it. They're like 10 years old, but they're running it totally, at arm's length, whatever. And Josh is pretty interested in, what kind of insight into the eventual outcome of this case might Howard Lutnick have, where he could be talking over dinner with his kids about how much they should be paying for these bets against Trump's tariffs. And does Trump know that he's instructing his kids to bet against Donald Trump? We don't know. All right. So here's the Wired report. Trump's Commerce Secretary loves tariffs. His former investment bank is taking bets against them. A subsidiary of Cantor Fitzgerald, run by the sons of U.S. Commerce Secretary Lutnick, is letting clients essentially bet that President Donald Trump's tariffs will be struck down in court. Cantor Fitzgerald, a financial services company led by the sons of U.S. Commerce Secretary Howard Lutnick, is creating a way for investors to bet that President Donald Trump's signature tariffs will be struck down in court. And remember, of course, they'll be taking their fees, whether those tariffs are struck down or not. They'll be taking fees from the people taking bets on them. Traders at the firm's investment banking subsidiary, Cantor Fitzgerald and Company, say they have the capacity to buy the rights to hundreds of millions of dollars in potential refunds from companies who have paid Trump's tariffs, according to documents viewed by Wired. And remember, this is from July 21st. Is the date on this one. By the way, Louise Matsakis and Zoe Schiffer are the authors who got the jump on everybody by a month and a half in reporting this story, which is otherwise, I think, gone largely unnoticed. So, Lutnick ran Cantor Fitzgerald for nearly 30 years until he was confirmed by the Senate in February when he turned over control of the firm to his sons Kyle and Brandon, who are both in their 20s, by the way. Since joining the Trump administration, Lutnick has emerged as one of the most vocal supporters of the president's tariff policies, wink, wink, which Lutnick has said would raise hundreds and hundreds of billions of dollars, although Trump says it's already $8 trillion. He says hundreds and hundreds of billions, which is maybe a little bit more possible, in revenue for the United States, eventually eliminating the need for Americans who make less than $150,000 a year to pay taxes. We'll see whether anybody gets any relief from that anytime soon. But the investment bank that made Lutnick a billionaire is now letting certain clients wager that Trump's tariffs will eventually be ruled unlawful, at which point companies that have paid the import duties can apply to get their money back. And there's no word, by the way, on whether or not the courts might have to rule on the legality of the system to give the money back. That may be a damper on the outcome as well. In a letter seen by Wired, a representative from Cantor said the firm was willing to trade tariff refund rights for 20 to 30% of what companies have paid in duties. So for a company that paid $10 million, they could expect to receive a $2 to $3 million in this trade. The representative wrote, "We have the capacity to trade up to several hundred million of these presently and can likely upsize that in the future to meet potential demand." They offer it out to clients who will pour money into it, and they can make a fund out of it and go buy things. It's interesting. And as Josh points out, it's not particularly unusual for investors. It's just that it's interesting. Remember, this is only something that's going to be available as a bet to make. Even if you think it's a pretty smart bet, you can only make this bet if you've got lots and lots of money lying around that you can afford to lose on this stuff. Just like with any investment, but, once again, the rich are getting richer on it. Cantor has already landed at least one major deal, according to the letter viewed by Wired. "We've already put a trade through representing about $10 million of IEEPA rights and anticipate that number will balloon in the coming weeks," the Cantor representative claimed. Experts say the deals are a form of litigation finance, an increasingly popular category of investing in which financial firms seek to make money from potential legal settlements. Many lawsuits can take years to resolve, and the structure can allow individuals and companies to get money up front or their lawyers' fees covered. The catch is that investors may only pay a fraction of what the plaintiffs eventually receive and profit by pocketing the difference. The fact that it's Cantor Fitzgerald, that raises some questions, says Tim Meyer, a professor of international business law at Duke University School of Law. It's quite interesting that the Commerce Secretary's firm is the one that's betting the tariffs will be struck down. Yeah, that strikes me as very interesting and quite telling about what those with connections to the administration think about the merits of the tariffs. Secretary Lutnick knows nothing about the decision because he has no insight or strategic control over Cantor Fitzgerald, wrote Kristen Eichemer, press secretary for the Department of Commerce, in an email to Wired. He has fully complied with the terms of his ethics agreement with respect to divestiture and recusals and will continue to do so. And by the way, if you saw a picture of Brandon Lutnick, now chairman of Cantor Fitzgerald, you'd think he was a teenager. And, as Josh Marshall put it, I think in his Blue Sky posting about it, well, he must be some kind of talent to be like 23, 24 years old and chairman of Cantor Fitzgerald. That is an unusual advancement, let's say. All right. Where do we leave off about this? About his claims about recusal. Cantor is not in the business of positioning any risk or taking views in litigation claims, including tariffs, Erica Chase, a spokesperson for Cantor Fitzgerald, said in an email statement. Yes, they are, but I don't wonder why you're saying this. It puzzles me, but it may be that, one subsidiary is involved and one subsidiary is not, and they're both named Cantor Fitzgerald, and, whatever. You get to claim that you're not in the business of positioning any risk or taking views in litigation claims, including tariffs. Well, it seems pretty clearly to be the case that that's not true for all the subsidiaries of Cantor Fitzgerald. But, maybe a closer reading would help us figure out exactly what she thinks she's saying. Trump, of course, announced in February that the U.S. would put steep tariffs on goods from Mexico and Canada under the International Emergency Economic Powers Act, that's IEEPA, and he did that a little earlier. He widened the trade war in April to include nearly every nation that sells goods to the U.S., which Trump said would now be subject to, quote, reciprocal tariffs ranging from 10 to 50%, except, that's not what reciprocal means. Oh, well. Hi, everybody. It's me, David Waldman. Yes, the same guy who interrupts you all the time. Interrupting you one more time just to tell you again, another reminder that your contributions are what keep this show on the air, and Patreon.com, Patreon.com, is still among the easiest ways to make the sustaining subscription donations that keep us afloat. Are you ready for the pep talk about how our Patreon campaign is still going strong and growing? Well, too bad. Yeah, the plain fact is we actually are headed in the wrong direction, and whereas we once had about 175 monthly patrons, we're now actually down below 150. Time to recruit some more. Not exactly the kind of news I wanted to share, but there it is. For those of you in a position to support the show, Patreon.com does make it easy to make those secure, recurring monthly contributions to do so. Patreon.com/KagroX gets you straight to our donation page. We've been through a lot together. The worst of the pandemic, we hope. The worst of the insurrection, we hope. So go ahead and treat yourself. You don't need an excuse. Give yourself the gift of a little something you enjoy in life. Support the show. And of course, if you happen to prefer using PayPal or even the Square Cash app, we're up and running on those options too. So thanks again, everyone, for all your support. We couldn't, or at least shouldn't, do it without you. Hope you'll be on board soon too. Thanks for all your support. All right, welcome back now to the Kagro in the Morning Show here on Netroots Radio. I was looking back to see whether I could find more information about Michael Velchik, who's representing the government in its suit against Harvard. And there's a little bit more, but nothing recent. But let's continue with the reading of the Wired magazine scoop, really, from more than a month ago about what Cantor Fitzgerald, Howard Lutnick's former firm and currently his son's firms, are doing with betting against the legality of Donald Trump's tariffs. How interesting. So in response to the imposition of these tariffs, which Trump, for some reason, I guess, tried to disguise by using the word reciprocal. But of course, you know what reciprocal means. And so it has to be in retaliation for something of equal size and import, and it's not. So they're not reciprocal tariffs. It was just a disguise. Well, we're only doing it reciprocally. No, it's unilateral. Oh. Well, anyway, in response, there was a flurry of lawsuits, including one from a group of small businesses that sued the Trump administration in the U.S. Court of International Trade. That was it. arguing that the president exceeded his authority and that the tariff should be ruled illegal. The trade court sided with the plaintiffs, but the Trump administration appealed the decision, and the appeals court allowed the duties to remain in place while the case is pending. That has forced companies to continue paying the tariffs until a final decision is reached. By the way, that is interesting now that I think about, as we're reading about how that sets up, and we were just talking about, Trump's weird false claim that they're not only undercounting the amount of tariffs by a factor of 10, it's really by a factor of 80. That these are $8 trillion claims of collections. Besides the outlandish number, there's of course the outlandish claim that, consumers aren't the ones paying the taxes. It's the countries that we put tariffs on that are paying the money. Here's the thing. If you've picked up anything about how the United States federal courts treat complaints like this, of any kind, really, against the government, then you would likely have picked up how easy it is for courts to jettison these controversies by saying that the plaintiff doesn't have standing to sue, right? In other words, there's no basis on which you can make a legal claim to be entitled to the relief you're seeking. You're just not the kind of party that can bring this sort of case. Either you haven't suffered the loss directly enough, or you're not allowed to sue the government for certain things. There are certain immunities, et cetera, et cetera. The fact that the United States Court for International Trade would entertain a lawsuit like this without resort to dismissing the case for lack of standing tells you a little something about how the Court for International Trade thinks about tariffs, i.e. the normal way, right? If the countries being against whom we were imposing tariffs were the ones paying the tariffs, then the companies who are suing because they say they're the ones paying the tariffs would have no injury to show and therefore likely have no standing to sue. It's not entirely clear whether or not the countries who Trump thinks are paying the tariffs would have any standing to sue if they didn't want to. I don't know if they have any legitimate claim against it. That the sovereign government can absolutely impose tariffs if it wants to, and other countries can't sue in United States court about it. They can sue in the world courts, and the World Trade Organization make a complaint, and they probably are, but that's just a matter of enforcing treaty obligations, and since we're not interested in enforcing our own law, unlikely we'll enforce international treaties as well. But there would be an easy answer. If it was the case that the countries were paying the tariffs, then these lawsuits get chucked out for lack of standing. You haven't been injured. There's nothing the court can do to help you with this. But instead, not only have they said, yes, this case can go forward, but you win. So this is about as solid an answer about who pays tariffs as there could possibly be. And that's only if you're willing to entertain a serious debate about who pays tariffs, which you shouldn't be because everyone knows who pays tariffs. It's a very clear process. Goods come in and they sit in the dock until someone pays the tariffs. And who pays the tariffs? The company that shipped them there? No. They drop the stuff off. They don't care anymore. They got their money. Who pays the tariffs to get those goods out of hock so that they can be shipped around the country and sold to consumers? The companies who are importing the stuff. Duh, of course. Kind of like everybody has always said. But there's a guy who says he's the president who's like mentally incompetent to the job, paints his face orange as though he's going to a Denver Broncos game every day. Unless he's going to play golf, in which case he goes, disguised as like the Scream Mask guy with his skin falling off his face. And his hands are bruising and his cankles are swollen and he's about to drop dead. But he says, no, several hundred years of economics are wrong. And really, your understanding of tariffs is completely upside down. Sure, it was only, taught to everybody and therefore caricatured in Ferris Bueller's Day Off 150 million years ago about tariffs and the effect on the economy. Whatever. Anyway, So, in response, there's been this flurry of lawsuits, including one from small businesses. And as it turns out, the court sided with the plaintiffs but left the tariffs in place while appeal was pending. That has forced companies to continue paying the tariffs until a final decision is reached, when they may be then finally eligible to apply for tariff refunds. Oral arguments are set to begin at the end of this month. That month, by the way, when this was written, was July. But the case could then go to the U.S. Supreme Court, meaning it may not be resolved for more than a year. So you're going to want that cash. It makes it a very attractive deal that you're being offered from Cantor Fitzgerald, and by now I'm sure other outfits as well. But I got the sense that there was news, like I said, heading into the weekend, that there was yet another favorable ruling. Maybe the Intermediate Appeals Court has agreed with the trade court below, which, of course, just sets them up for the Supreme Court. And no telling what this Supreme Court is going to do with this stuff. It seems pretty clear that the tariffs were imposed outside of the normal procedure and therefore probably illegally. But, you know, the new rule may be Trump gets whatever he wants, which would be interesting, you know, if Wall Street ended up losing those bets as a result. I guess they'd be sad, but then they would write it off on their taxes. Don't worry about it. The rich people win no matter what. Anyway, so because the Supreme Court still may yet get the case, everybody's still in limbo. And in the interim, affected businesses have argued in court filings that they could go out of business or suffer other harms from continuing to pay tariffs. The small business plaintiffs in these cases have basically said, this is an existential issue for us, says Meyer. Ordinarily, it's the sort of thing you can get probably some temporary relief from if the damage is going to be unsustainable and irreversible. You know, you could make a claim. Why can't we get a restraining order, an injunction, or whatever, or at least say, all right, well, pending the outcome of this case, the irreparable harm lies with the businesses, not the government, probably, because they were never supposed to be collecting these taxes anyway. I know they've made some guesses and bets on whether or not they can budget based on these collections, but, you know, the more likely harm is on the merchants, I would think. Ryan Peterson, CEO of the logistics technology company Flexport, says that receiving a tariff refund from the U.S. government can be an onerous process all by itself, right? Like, even if the courts say, yeah, this was totally illegal and that's our final decision, what's the process by which you get a refund? There probably used to be such a process in place, but it probably handled a much lower volume because there were just many fewer tariffs being collected, and it was being done so. They were being collected under a stable regime where the numbers didn't change very frequently, and when they did so through the correct process, and you had all sorts of notice for when that was coming down the pike. And instead now the tariffs change daily. The numbers go up, down, whatever, based on whether or not Trump has enough chocolate cake, something like that. So besides the volume and the irregularity, I'm sure nothing is standing in the way of efficient refunds, right? So it can ordinarily be an onerous process, even under normal circumstances. Companies need to file what's called a post-summary correction, essentially an update to the customs paperwork for a shipment. And who knows whether Trump is even doing any of this paperwork. When you file those things today, it takes 6 to 12 months to get your money back once approved. It's a physical check that arrives in the mail, says Peterson. Facing an uncertain timeline and mounting financial pressure, some companies may decide it's wiser to accept an offer like Cantor's, even if it means walking away from a potentially bigger refund later. I think it may be attractive for some people, says Peterson, and I'm sure that it is. So anyway, today's update, I guess you could say, on this is from Josh Marshall at Talking Points Memo, who has gotten this, I guess, information dropped in front of him and has his own take on what's going on. I don't know whether James sent it to him, but if he did, congratulations for driving the news cycle today, James. Lutnick family angling to make astronomical sums off court nixing tariffs. That's the headline for Josh Marshall. I've read this thing 3 times now, and so it's counted them all against Now, that's one thing I don't like about the TPM paywall is it counts repeat readings of the same article as reading a new article, which I don't know. I guess it makes some logical sense if they're trying to make you pay up. So, I guess any tactic is fair game there. I tend to feel like you should only be charged for a different article, but I guess if you want to read it, that's of value. So anyway, we won't argue with them about this for now. This is not new. Josh starts right out by saying, but I at least hadn't heard any of these dots connected. I wasn't aware even of the dots. A friend mentioned to me over the weekend, James, was it you? That he'd heard about Wall Streeters buying up the rights to tariff refunds from big corporate importers. So the idea is that a Wall Street firm goes to an importer and says, you've now paid $10 million in tariffs, and I'll pay you $2 million right now for the right to collect the refund if courts ever end up deciding the tariffs were illegal. My friend had also heard that one of the most aggressive buyers was Cantor Fitzgerald, the firm until recently headed by Commerce Secretary Howard Lutnick, and now run by Lutnick's sons. 20-something Brandon Lutnick, pictured above on the left in it's a 2016 photo, this one that he runs, is the current chairman of Cantor Fitzgerald. He must be hella talented. Now, okay, granted, this would be about 10 years ago, so he really does look like a teenager, and I guess he actually was. Still, extraordinarily young and I would say probably inexperienced for running a place like this, but, whatever. I mean, how much damage can be done? I'm sure he's got good advisors, including, the Commerce Secretary of the United States of America. Damn, I thought, says Josh. That's a hot story. Crooked as the day is long, but I'm not sure how I or we would track it down without better finance world sources. Still, it was worth some quick Googling. It turns out that this is happening, and Cantor's role has already been reported. Wired and others reported this more than a month ago. In mid-July, according to Wired, we've just read it, of course, Cantor was buying up the rights to your potential tariff refund at between 20 and 30 cents per dollar. Needless to say, I bet that price has gone up a lot since last Friday's appellate court upheld the lower court ruling, there's our answer, that almost all of Trump's tariffs are illegal. So in paper terms, Cantor has probably already made a ton of money on this. Now, before going any further, I want to make clear that in itself, this transaction is fairly unremarkable. A huge amount of modern finance is about making bets on uncertain outcomes, bets which can be structured in various ways. It might be commodities futures. In this case, it's the right to collect a refund that may never happen. The sale of a debt, a ubiquitous feature of modern finance, is similar. Purchasing debt, whether it's a government bond or your home mortgage, is fundamentally a bet on the likelihood of repayment. I don't want to belabor the point, only to make clear that the transaction and concept is neither outlandish nor suspect, at least no more so than other parts of modern finance. All that said, it's hard to imagine anything more emblematic of the Trump era than what is, for all intents and purposes, still the Commerce Secretary's company. Yes, arm's length handoff to his 20-something sons, he says, parenthetically and in italics. But it's still weird, the Commerce Secretary's company making bets on something Lutnick himself has significant influence over. Indeed, far more important than whatever influence Lutnick has over tariff policy is that that significant visibility he has into the bet's probable outcome. Right? That's a good point. We don't know what kind of weighing in he's been doing, but I mean, if you could imagine, I guess if you were to imagine a cabinet meeting at which substantive issues were discussed, which isn't really what's happening out there, but if you were to imagine such a thing, you could imagine there perhaps being a discussion. We have, let's say, two options. I don't know how many. 2, 3, 5. Doesn't matter. There are multiple options of how to approach these tariffs. Imposing them, what number to put on them, how to collect them, how aggressively to pursue something, how to formulate the executive orders imposing them such that they pass legal muster. Right? And so that point I would like to look at for a second, right? Okay, suppose there's a discussion over, well, should we go with this formulation in the executive order, which we think has a better grounding in existing law, though let's say perhaps if we go that route, we might be able to impose tariffs up to 15%. But if you wanted to impose, I don't know, this is hypothetical. If you wanted to impose 30% tariffs, you'd have to go with this more aggressive formulation of the president's alleged right to impose these things unilaterally. And that's more likely to lose in court. Even if the numbers, even if they aren't attached to higher tariffs, one formulation says, well, we're utilizing delegated congressional authority, and one version might say we're utilizing what we claim is the president's inherent Article 2 powers. That's one of the favorites in the Trump administration. They want to enhance the perceived power of the presidency under the Constitution. So you make a claim like that, but the courts are more likely to strike that down than, or at least more quickly than they would be to say, no, actually, we claim to have had this power delegated to us under this, that, or the other congressional act. And you got to unwind whether or not our interpretation of the delegation of that power is correct versus inherent Article 2 powers to impose taxation, which, is pretty strictly unconstitutional. But would you go with that formulation if the people who preferred the strongest possible image for the Trump presidency, even if it was doomed in court, would you go along with them if, although you knew it was doomed in court, you were likely to make a ton of money if they did lose in court? So what kind of advice would you be giving the president? The stronger but likely unconstitutional formulation of the executive order, which will make me millions, billions perhaps, or the better, far more grounded interpretation that would possibly allow the tariffs to stand, and I would just lose those bets outright? Where would your loyalties lie? In giving the president the best possible advice to create the most stable regime of law, or the possibility of making millions of dollars by effing it up intentionally? You tell me what you think Howard Lutnick would be doing and what he might be telling his sons he was doing. That's where the interest lies for me. Lutnick can't be certain, of course, what's in a judge's mind any more than Trump can, to return to Josh Marshall's interpretation. But he'll have lots of visibility into what the government's lawyers think and how they rate their odds of success, what their arguments will be. On top of that, given the immense corruption of the current Supreme Court, I would let's scratch that put. It's there, but I would say there's at least a 50-50 shot that Trump, and thus Lutnick, will get signals from one or more of the justices about how the court will rule. Any way you look at this, it's corrupt as hell. And on a more metaphoric level, it typifies the heads I win, tails you lose rules the billionaire class and their sub-billionaire toadies live by. And that's certainly true, too. If you're, thinking about what you're doing here and thinking about tariffs as taxation and saying the Commerce Secretary's sons are betting against the legality of the taxation regime that they've imposed on you and not them. And by the way, they're betting against the legality of it. And if they win, they make a ton of money. And if they lose, they're going to write it off on their taxes anyway, and you'll pay for that bet. There's that, which is also annoying. So what's not clear is how much of this stuff the Lutnick boys have actually purchased. In July, the U.S. government brought in $29.6 billion in tariff revenue compared to $8.7 billion in July of 2024. So that's more than $20 billion in probably illegal tariffs before many of them have even kicked in. The current market for these refund rights is already in the tens of billions and could hit the hundreds of billions by year's end. According to Wired, Cantor said in July that it had the capacity to buy the rights to hundreds of millions of dollars of tariff refunds. So the amounts we're talking about, both at risk and in potential windfalls, is very, very big. In mid-July, Cantor was buying for about 25% of face value on these refunds. Just looking at the logic of the situation, I'd be shocked if you couldn't sell that today for 50% of the face value and quite possibly substantially more. Right? So Cantor could say, all right, you caught us. We're doing more or less insider trading. We'll get out of this position. We'll sell off these assets before the court rules. But yeah, you could probably get somebody to say, I'll pay twice what you paid for them because now the appellate court has upheld the ruling that they're illegal. It's much more likely that I'll get a payoff. You see, the initial court decision and Friday's appellate decision, tariff cases have their own set of courts, by the way, have both gone decisively against the White House and the legality of the tariffs. In any normal universe, SCOTUS's decision would be all but a fait accompli. The only thing weighing in the White House's favor is SCOTUS's propensity to give Trump almost everything he wants. But even in this degenerate timeline, the odds for these tariffs don't look great. If Cantor was able to buy up a lot of tariff refund rights at 20 to 30 cents on the dollar, the payoff could be vast. It's good to be the king, or even the king's toady. And then there's a late update added here. I did a little more poking around on the details of Lutnick's, quote, divestment from Cantor Fitzgerald. The Journal reported in May that on his confirmation as Commerce Secretary, he turned over leadership of Cantor Fitzgerald to his sons. Brandon became chairman and Kyle became executive vice chairman. He turned over his equity interest in Cantor Fitzgerald to a trust to benefit his adult children. That is, Brandon, Kyle, and we're forced to say whatever other children he has. We don't know. Meanwhile, two businesses which are owned by Cantor will buy back from Lutnick the equity he personally owns in those businesses. Those two purchases together will total just over $360 million. Under government ethics rules, since Lutnick has to do this sale as part of his government ethics agreement, he gets away with paying no capital gains tax because it's a forced sale, so long as he places the money in something like a mutual fund. I don't think we know what counted as gains on those buybacks, but that has to have been a massive tax savings. Meanwhile, Lutnick's divestment from Cantor, his sons run it, his equity in the company is now in a trust for his sons, seems extremely nominal. Quite true and well worth remembering. But yeah, totally a heads I win, tails you lose kind of a setup. It's rather remarkable. Well, James, I hope you got what you wanted out of that one. And I'd be very interested to know if you also sent this to or spoke to. Maybe you are. Maybe you're a neighbor of Josh Marshall's and you brought it up to him over the weekend. If not, you have a like-minded friend out there who you may have yet to meet. All you have to do is hang out with Josh Marshall and figure out who's got a mind running along the same track as yours. So thanks for bringing that to our attention. Trump's not dead, and Jeffrey Epstein still got to release those files. Okay. So that's where we stand at this point. What other things might I need to share with you that are top of mind here? What is this one? Oh, yeah, that's of some interest too. And let's see. I'm trying to remember where. Well, let's see if I can open this one up. And okay. And Rosalind McGregor had sent us a link to this. This is an interesting story because it's a commentary on a story that Greg, I think, I had it in Instapaper. I didn't get to read it. Greg mentioned it in one of his roundups probably a week to a week and a half ago, and I didn't read through it piece by piece because he had mentioned it and referred to it. It was, do they have a link to it in here? So that I can open both up, or is this just, no, I guess not. But somewhere in, and probably still in Instapaper, because I think I thought it was of interest, was a piece in Politico magazine, an opinion piece from when? Can I see it? In this, the graphic for this piece reproduces this page, but no, I can't see the date on it. And I'll have to go searching for it, making some notes here. But the title of it was Why Markets Aren't Freaking Out Over Trump's Attack on the Fed. That is to say, the attempts to fire everybody, both Lisa Cook and Jerome Powell and the other woman whose name I can't recall right offhand because she made a quiet exit, and trying to figure out whether it was a matter of being threatened in the same way as Lisa Cook. Because my working theory on the Bill Pulte offensive is, there we are, is that he knows that this kind of alleged occupancy fraud is everywhere, because the vast bulk of second home sales, which may or may not have run through Pulte or may or may not have run through his finance arm for Pulte, but you have some familiarity with it by being in the home building business. The idea that almost everybody buying second homes is encouraged to say, go ahead, check the box and say it's a primary residence or principal residence. You might even be able to make a case that it is. But if it isn't, no one's going to look. As they say about it, no one investigates performing mortgages, generally speaking. You're supposed to when you buy them in securitized instruments later on. But, that's your business if you don't. But if the mortgage is performing and people are paying, people don't typically care, whether they should. I guess they would worry about they should be paying more, but they've agreed to accept, the terms of the mortgage when they purchased that debt from the loan originator at some point. So as long as they're paying what they were agreed to be paying, I guess they have no reason to worry about it. And nobody looks at the papers, right? So at any rate, why Trump's attack on the Fed isn't spooking Wall Street and why it's a big mistake is the piece from Politico. And Rosalind has sent me, I guess, a follow-up piece to it or a reaction piece to it that I thought might be interesting. But because, I'll review in the next minute how long is the original article. And because Greg had made some mention of it, I will just assume that you remember it word for word the way Greg told it to you, or maybe give you some quick summary of this article and then move on to the companion piece that Rosalind has sent me. And then at some point during this next hour, we got to talk about the fact that Congress coming back to town. The break is over. Less than 30 days remain in the fiscal year, which means we're basically probably about 30 days or less away from facing government shutdown once again. And who knows what that even means to a Trump administration at this point in the game. All right, welcome back now to the Kagro in the Morning Show here on Netroots Radio. All right, 1 minute is just not enough time to do the thing I wanted to do. So here's what we've got. This opinion piece in the Politico magazine, not overly long, and I think we can read through it. And it was a good question. Why aren't the markets freaking out? I had some thoughts about what an answer might be, but now everybody else who actually knows what they're talking about is beginning to give those answers. So let's look at them. Why the attack on the Fed isn't spooking Wall Street and why that's a big mistake. Well, this is, okay. As a matter of fact, all right, this is Nathan Tankus who had written this piece, which is, I think, why Greg, recognizing his name, brought it to my attention. And then the piece that Rosalind sent, is that different from this? No. Okay. This is also is Nathan Tankus. So good. All right. It's not a companion piece, but now I guess, that explains why neither of them are particularly overlong. That's good. And let's see, is this a different piece or a follow-up in some way, or is it the same thing? Interesting. I think it looks at first blush like maybe I've got the piece here from Politico, and then Rosalind sent a piece from Nathan's own newsletter saying, hey, I've got a new op-ed in Politico, and maybe discussing a slightly different angle, because it looks like it draws on some different material. Okay. I mentioned that Greg had said something about it. We need to remind ourselves about it then. So Nathan wrote back on the 26th, Scott's birthday. Are you there, Scott? Scott! Yes, of course you are. And by the way, apologies to Scott and Greg, both of whom I failed to keep, I thought, correctly apprised about the status of yesterday's day off. But everybody, between the two of them, they said, no, that's what you said you were going to do on Friday. And Greg said, yeah, I figured we were off on Monday. I wasn't coming anywhere near the place on Monday. It's Labor Day. Okay, so Nathan Tankus wrote back on Scott's birthday, President Donald Trump's campaign to dominate the Federal Reserve reached new heights with his effort to fire Fed Governor Lisa Cook, and Wall Street responded with a yawn. Right? We're supposed to see that the powers that be, the deep state, will roar back. There's no way they're going to stand for this sort of thing. Even the Supreme Court, which is giving Trump everything he's asking for, is saying, well, you can't do that with the Fed governors, unless, of course, you want to do that with the Fed governors, in which case, let's talk. Wall Street responded with a yawn. Why would that happen? The tepid reaction from markets is perhaps shocking, but it's not surprising. The second Trump administration has been consumed by two central themes. The first theme is the unprecedented pace at which this administration has attacked the rule of law and the constitutional system on which it's built. The second theme is the unprecedented weakness of the response from major institutions to the Trump administration's actions. Wall Street's passivity amid Trump's unprecedented attack on the Fed is only the latest example. To economists, the independence of the Federal Reserve is particularly sacrosanct. They think absolute independence from the president and Congress is the best result for the economy in the long term. Trump, on the other hand, views an independent Fed as his enemy. For months, he's been browbeating Fed Chair Jerome Powell to cut interest rates in order to boost the economy, despite Powell's public views that so far the time hasn't been right. Trump sees the world as a real estate developer first, and to real estate developers, lower interest rates are like manna from heaven. Throughout Trump's campaign targeting the Fed, investors have remained remarkably calm, even now. The stock market dipped briefly when Trump threatened to fire Powell himself, not Pyre Fowl himself, although that might also have caused some consternation. That, another legally dubious move, of course, but it quickly recovered. Why? Well, for one thing, traders have continued to have undue influence in the Fed's and especially Powell's capacity to uniquely withstand attacks from Trump. Additionally, there is genuine uncertainty and confusion on Wall Street about the potential consequences of a Trump-controlled Fed. The erratic back and forth on tariffs have ironically opened the door to soothing illusions regarding how bad Trump's personal dominion over government and economy really is for the corporate bottom line. Wall Street's aphorism that Trump always chickens out, taco, right, has also helped sustain the stock market highs. That's true, too. And I guess one other thing you should probably be figuring on in the background, if it doesn't make an appearance in this article, is Wall Street has also found out how to profit off of the possibility that Trump's tariffs won't work. In other words, they find hedges against just about anything. If you think the independence of the Fed is sacrosanct, but you think it might be eliminated nonetheless, you probably start finding ways to take positions whereby you would benefit from the subsequent lower interest rates. That seems like a pretty easy thing for Wall Street to figure out a way to do. There's also another important factor at work, Nathan says. Let's see what it is. While writing at my publication Notes on the Crises this year, and that's what Rosalind has sent to me, I have argued that stock markets are conventional wisdom processors. What this means is that traders do not simply buy and sell on new information, but on how they believe this new information fits into their compatriots' view of the world. This may not seem like a major distinction, but it is. A Trump win last November was anticipated to be, quote, good for stocks by their conventional wisdom, and indeed, the stock market went up after his election. These conventional wisdoms can be surprisingly sturdy in the face of events that seem explosive to us outsiders. For many years, business groups and conservatives argued regulatory and tax uncertainty would disrupt the economy and lead to a sharp negative reaction from markets, which is, I guess, where our belief that that was true came from, right? Anyway, these were allegedly major factors preventing the recovery from the great financial crisis. Of course, there were always doubters to such narratives, myself included, but they have never appeared as farcical as they do today. In addition to Trump's attacks on the Fed, he upended global trade and made tariffs a matter of his erratic and personal discretion. He is concentrating control over the federal government's budget and claiming power to not spend what Congress has ordered to be spent. More on that later. He claims widespread authority to control agencies, including agencies legally designated as independent. This is without even commenting on his use of the military in U.S. cities. But the markets don't seem to care about such massive uncertainty about the future. The threat to the rule of law emanating from a second Trump term was clearly not a part of investors' calculations. It's important to pause on this point. Stock market traders are neither legal experts nor scientists, but for too long, market judgment, enclosed in scare quotes, has been treated as, if not infallible, at least the best judgment given the evidence and the information available. The response of the stock market to events of the past year shows how false that is. The reality of Trump's threat to the very system that investors depend on has failed to become the conventional wisdom among traders, and thus Wall Street continues its muted response to the cataclysmic. I guess I'll add my own observation here that given how lawless Trump has been, the bet that he'll nonetheless be good for business or the business bottom line seems an unwise one, since if you bet on it, particularly, I guess, if you were, say, let's say Cantor Fitzgerald, and you're betting against the legality of his tariffs, and the tariffs go down, and you win a big chunk of money and make Trump mad. I mean, if you're totally lawless, then why not just say, oh, as a matter of fact, it turns out you shouldn't be able to bet against the legality of the president's actions. I'm seizing your profits. And while that would, of course, come straight out of Howard Lutnick's pockets, does anybody wonder for very long about how independent Lutnick will be in all this? Actually, this is a great idea, Mr. President. Please take the billions of dollars out of my pocket. Don't worry, I'll kick it back to you in Trump coin or something like that. I don't know whether he even pays him any compensation for it. But I've said early on in all of this, I mean, if you're completely lawless about this, what makes you think you're entitled to keep the profits that you make by betting correctly about Trump's instability or whatever it is that's going on? Suppose betting correctly on Trump doing a 180 and deciding to become the most stable genius ever, whatever it is. What makes you think you're entitled to keep those? The fact that it's private property? We're lawless now. He's going to see a big pile of money and say, I'm taking that and you can't stop me. Unless you're, I guess, enough on his good side that he only decides to take half. Anyway, that's not being figured into Wall Street thinking, because that's just anathema to Wall Street thinking. What do you mean? You're just going to seize my assets and nationalize them or keep them for yourself? Say you're nationalizing them, but steal them. You can't do that. Can't he, though? Haven't you made it possible for him to do that? Anyway, back to Nathan's more ordered thinking, let's say, which brings us back to the Federal Reserve. The fact is, the looming death of the Fed's independence came in February with the Trump administration's attack on independent agencies writ large. In the U.S. legal system, the Federal Reserve's leadership has no special protections against removal other than, has no special protections against removal that other independent agencies do not have, even if the Supreme Court might contort itself to suggest otherwise. That's certainly a point that we've made in reading other articles. There's really no logical reason to think that the Fed's protections from this kind of manipulation are any greater than anybody else's. It's just that the Supreme Court freaked out for some reason and said, well, you can't do it to the Fed unless you can. But in the meantime, you just can't. Let's just say that. Unless Trump tells us that they can, and uses leverage against us or our families to make us say that. If Trump's initial executive order to rein in independent agencies was not sufficient to raise alarm among investors, Trump's firing of 2 Democratic appointees to the Independent Federal Trade Commission in March should have been. Yet the conventional wisdom on Wall Street was that the Fed was safe and has not budged. In fairness to the stock market and the traders whose rituals bring it to life, the Federal Reserve's continued control over monetary policy appears to be an either-or question. Either it will or it won't be an independent central bank, and it's hard for investors to price something like that. price in something like that. That is where the role of leadership comes in. Leadership, especially leadership with widespread credibility on Wall Street, can effectively change the game. A particularly respected leader could make the rule of law a far more active part of how the stock market arrives at its conventional wisdom. The leader I have in mind, of course, is Federal Reserve Chair Jerome Powell. If Powell does not come to Cook's defense and continue to treat her as a governor in good standing, he will be the Fed chair who oversaw the destruction of the Federal Reserve's prized independence. Given the financial industry's myopic worldview about Trump's second term so far, Powell's willingness to defend not just the future of the economy, but the rule of law in the United States might be one of the few things that could shake it awake. Powell has a duty not just to the institution he holds dear, but to the United States Constitution and the American people to speak forthrightly at this very late hour. So, with that in mind, I turn to the link that I got from Rosalind, which points to something of the same date, so I don't know what else he adds to it. But it's, again, August 26th. New Politico op-ed on Trump's attempted firing of Fed Governor Lisa Cook. He points to the screenshot of it in Politico magazine. And let's see, special announcement. It begins. Okay. That's actually a fundraising announcement, which, yes, sure, absolutely. Chip in. By the way, he takes Venmo. I don't know if we have a Venmo. We should have a Venmo account. Will that encourage people to donate via Venmo? We should, of course, be thanking everybody who donates to us. By the way, I will say things did slow down a bit in August. We got a lot of a burst of fundraising with the new tiers put in place in July. Do I need to make up new tiers? Maybe that's it. People just enjoy the names and weirdness of the tiers and join as a result of that. But the August was not nearly the big boom month that July was, at least at the end of July. But, it's the summer months. And maybe now that we're back in the school calendar, we can we'll do Schoolhouse Rock about how you should support the show, I guess, and see whether that nets us anything. All right. So what's up here? Right now, he's just talking about the fact that he has published the op-ed that we just read. Hello, readers. An hour ago, I had an op-ed published in Politico about the Federal Reserve, so 1 hour worth of update here. For those who didn't hear, late last night, Trump declared that he fired Lisa Cook over the mortgage fraud allegations, quote-unquote mortgage fraud, because we haven't even found out anything about whether or not even fraud was alleged here. But apparently, I had my finger on the pulse of events. Here is a reproduction of the August 25th, my birthday, letter from the White House purporting to fire Governor Cook. By the way, if you want to know the language, it's not a long letter. Pursuant to my, should we read it in his voice, even though there's no chance that he wrote it? Pursuant to my authority under Article 2, there, again, like we mentioned, where's the authority coming from in some of these things, like the debate over whether or not you should base tariff authority on a derivative of, let's say, delegated Article 1 powers from Congress, or just claim it's an outright inherent power of Article 2. The maximalists will always go for the Article 2, but if you're also looking to lose in court so that you get a big payday, you might also likewise argue, go with the Article 2 thing. It'll never work, and I'll make lots of money. Like, that's, an unwise and unethical way to run the government, and that's why it's an interesting story. Pursuant to my authority under Article 2 of the Constitution of the United States and the Federal Reserve Act of 1913, as amended, you are hereby removed from your position on the Board of Governors of the Federal Reserve, effective immediately. The Federal Reserve Act provides that you may be removed at my discretion for cause, which is two different actual standards. But he just throws them together in one sentence. What's the cause? My discretion. And how do I know I have cause? That determination of whether or not I have cause is also at my discretion. No, not the way things work, and they're two different standards. The reference, 12 U.S. Code Section 242. I have determined that there is sufficient cause to remove you from your position. Have you? What is that cause? Somebody said you did a thing. They haven't filed any criminal charges against you, much less convicted you of them, but somebody did say that you possibly did a thing. So that's a cause. What kind of cause? Enough. That kind. I have determined there's sufficient cause to remove you from your position, as set forth in the criminal referral dated August 15th, 2025, from Mr. William J. Pulte, Director of the Federal Housing Finance Agency, to Mrs. Pamela Bondi, Attorney General of the United States, hereinafter referred to as criminal referral. And again, criminal referral is not the same as filing charges. This is the housing finance guy saying, hey, Department of Justice, do you think charges should be filed? I think they should, but I'm just the housing finance guy. That's nothing. You're the one that files criminal charges. They have not yet filed those charges, much less shown us the evidence behind such charges or brought them to trial or anything. No criminal procedure has started here. But, that's cause. I'm going to fire you for cause now. Not to mention, of course, all the time we've spent describing why Bill Pulte, being the one to quote-unquote find this quote-unquote mortgage fraud, is so ridiculous. He's probably been party to more of this fraud than anybody in America, or very few other perhaps larger home builders might possibly also be subject to it. I don't know. Maybe Pulte's not the biggest home builder in America, but I was saying over the weekend, this would be like allowing the Sackler family, Richard Sackler, from what's the name? Is it are they not Pfizer, but is it Pfizer? Who's making all the opioids? Rats. I forget offhand now, but all right, we'll go look it up so we know what we're talking about. But it would be like having the Sackler family reporting that there was all sorts of Purdue Pharma, the developer of OxyContin, right? But if they were suddenly installed as HHS director, no comment on whether or not they do any better or worse than RFK Jr. But let's say they didn't go with RFK Jr. from the beginning, but they went with Sackler because he was a billionaire and Trump loves billionaires. So they make him Health and Human Services Secretary. It would be like him saying, I know doctors who have been overprescribing OxyContin this whole time. We should go after them and leverage that against them in some way. I don't know, whether we extort political donations from them to make the charges go away, whatever the leverage is we want to do. Let's start taking down people who are political enemies and who happen to be doctors. I have inside information. I have insight, let's say, into facts that lead me to believe that criminal charges could be brought to bear against certain doctors for overprescribing OxyContin. The reason that I know about it is I pressured them to overprescribe OxyContin, or my company did. But now I'm in a position not to be held accountable for it, and I can use it to leverage money out of them. So let's do it, right? He's been party to this overprescription the whole time, and he's going to use it to go against the doctors who he kept saying, please, overprescribe this stuff. Similarly, the Pulte family has been selling people homes for decades saying, commit this fraud and you'll be able to lower the costs of the transaction and therefore afford more of our houses. But now I've caught you because I know you're filling out paperwork fraudulently. I'm helping you do it. All right, so back to the letter here. As set forth in the criminal referral, Trump is saying there's sufficient reason to believe you may have made false statements on one or more mortgage agreements. For example, as detailed in the criminal referral, you signed one document attesting that a property in Michigan would be your primary residence for the next year. 2 weeks later, or some other very short period of time, it says 2 weeks, really, you signed another document for a property in Georgia stating that it would be your primary residence for the next year. It is inconceivable that you were not aware of your first commitment when making the second. It is impossible that you intended to honor both, unless, of course, they both said principal, not primary. But we don't know. The Federal Reserve has tremendous responsibility for setting interest rates and regulating reserve and member banks. The American people must be able to have full confidence in the honesty of their members entrusted with setting policy, on and on. But at a minimum, the conduct at issue exhibits the sort of gross negligence in financial transactions that calls into question your competence and trustworthiness as a financial regulator. The executive power of the United States is vested in me as president. And as president, that's interesting to say, I have a solemn duty to ensure that the laws of the United States are faithfully executed. I have determined that faithfully executing the law requires you and requires your immediate removal from office. Yeah, sure, right. Faithful execution of the law, of course, would wait for, let's say, I don't know, a court determination that this really happened. But whatever. Thank you for your attention to this matter. And then scribbledy. By the way, there's no signature block on this thing. Everybody is just supposed to think that this scribbledy must mean the president. I don't know. I guess it is. It's interesting that there's no signature block. Don't you think there ought to be? Anyway, what does Nathan have to add to this? My op-ed develops the ideas I've been developing in the past 6 months regarding exchange-traded markets as, quote, conventional wisdom processors rather than information processors, as a certain influential school of thought has claimed with increasing success over the past half century. Information sounds better than conventional wisdom and just guessing, I guess. That's why they go with that one. I didn't get to focus on Governor Lisa Cook, but I do want to say a little bit about this. Lisa Cook is the first black woman ever appointed to the Federal Reserve Board of Governors. She's only the fourth black person ever to be appointed. Trump certainly has a disdain for Federal Reserve independence. However, he has also been purging black people from government, and it would be a mistake to think racism does not play a major role in how Lisa Cook has been targeted. I know for many readers this is a boring, uninteresting, or even ideological point. Not me. In my view, it is a fact, and I think it is long past time to push through the discomfort or disdain that many people have about talking about racism and race in everyday politics. At the most basic level, you will not understand what is going on without it. The attack on, quote, DEI is part of the restructuring of our government around Trump's personal agenda. If that doesn't bother you in the Fed, maybe it'll bother you at Cracker Barrel. Lisa Cook deserves better, and it will be shameful at many different levels if Chairman Powell does not come out swinging in defense of her. And then on to the op-ed. And it's offered up here. Is this? Yeah, this is basically an introduction then to the op-ed, which Rosalind was recommending that we read. And although it was mentioned, like I said, by Greg a couple of weeks ago, we didn't read through the whole thing and spend quite enough time on it, and this was a good excuse to do so. Thank you to Rosalind for bringing it back to our attention. So I said that there was some other material we needed to get to, and so there is, and I think it's probably up near the top. As Congress comes back into session, it becomes more important to take a look, as Trump says, take a look at a maneuver he's making on yet another front in which he's claiming powers that the Constitution ought to preclude to him. For instance, where is this one? This stuff came in just before the weekend. I got something from The Hill and from Progress Pond. Everyone remember Progress Pond, where Booman writes? Remember Booman? A long time, I say remember, like he's gone now, a long time Netroots denizen, blogging from the golden era alongside the rest of us. Booman posting this piece. Generation X knows there's no such thing as a pocket rescission. Yeah. Well, there isn't. I don't know why Generation X would have any particular claim on this one, except, oh, yes, I see up top. The Gen X, I guess, and their affinity for Schoolhouse Rock, although it hasn't, helped keep apparently the majority of Gen X from becoming Trumpers anyway. But that, alongside an article in The Hill on the same subject, what to know about Trump's pocket rescission, that may or may not be to know that there's no such thing as it. But let's start with, where shall we start? We'll start with Booman's view of this, because why not? It's already open. This is August 29th, beginning of last week. Let me tell you a secret about Generation X. Oh boy. We grew up with Schoolhouse Rock. That's not a secret, but it's okay. We learned all about how a bill becomes a law. And yes, we also learned that the president can veto a bill, but if the president signs a bill, that makes it a law. Also, while I'm just a bill only hinted at it, Congress can also override a president's veto to make a bill into a law. And of course, you all know that. Either way, once a bill is a law, the president has to live with it. That's what we were taught and what we believe. Okay. But of course, we've learned that reality can be stood on its head occasionally. We were never taught about anything like a pocket rescission to Generation X. That's not a thing. And it looks like a lot of people in Congress agree with us. This is a link here to a Politico piece on the subject. We got Politico and The Hill to read from on what is this thing? Why do they think it's going to work? Or why does Trump believe it's going to work? Why doesn't anybody else believe it? And what will it mean?
Sup fam, it's your boy Darwin, aka Darwin_Darko, aka the most reasonable man in America, aka KITM's senior black correspondent. You might remember me from such recordings as Spacemen vs. Space Cadets and We Need to Talk About Joe Biden. Today, I want to bring you good news about that thing you've been struggling with. Do you suffer from giving too much of a damn? Do you turn on the series of tubes and find yourself outraged at the particular way some news organization strung some sentences together only to realize, nope, this is not some fictional hellscape? Well, guess what? You no longer have to accept the life of giving too much of a damn. You can do something about it, because even you, yes you, can be a show contributor. Now I know what you're thinking. Hey, Mr. Most Reasonable Man in America, I'm not some professional podcast talking guy. Don't worry about it. Do you have a smartphone or some other electronic recording device? Well, that's all you need. You too can have a segment where you can read us an important article and give us your take. Read one of your own original essays, or even just give us your commentary on something you'd like to share that's important to you. Fair warning though, side effects may include general punditry, having opinions and hot takes, getting stuff off your chest, and hearing your own voice. If your recording lasts longer than 5 to 7 minutes, please consult kagrox@gmail.com. That's KAGROX@gmail.com.
All right, welcome back now to the Kagro in the Morning Show here on Netflix Radio. We're just on our way into Boo Man's recitation of his rejection of the supposed concept of the pocket rescission. Most pocket everything doesn't really exist. The pocket veto is, I think, the only pocket concept I've ever seen gain any provenance in the Supreme Court so far. But now, new theory, pocket rescission. What's going on with this thing? Well, let's see. He's got an excerpt from, I guess, what is the Politico piece on here, which reads, the White House Budget Office said Friday morning, so what are we talking about, just prior to the August 29th, so about a week and a half ago, that President Donald Trump has canceled $4.9 billion in foreign aid by using a so-called pocket rescission, furthering the administration's assault on Congress's funding prerogatives, which is what we were talking about earlier in the show, linking all this stuff together. The impossible claims of presidential authority up to and including, as Nathan mentioned in his Politico piece, the reminder that he's unilaterally canceling duly appropriated congressional funds. The move raises tensions on Capitol Hill as lawmakers face an October 1st deadline to avoid a government shutdown. We mentioned that earlier. Many lawmakers of both parties, as well as Congress's top watchdog, view the maneuver as an illegal end run around the power of the purse. What we're talking about here are foreign aid funds appropriated by Congress in a bill that the president signed, which makes it a law. It's the administration's responsibility to spend this money in the way Congress intended it to be spent. Remember how Trump closed his letter to Lisa Cook, as we were just reading it, that the president has an obligation to see that the law be faithfully executed? Yeah, well, not if it's an appropriations bill, says Donald Trump, because reasons, that's the way I want it. The law should be, take care that the law be faithfully executed. By faithful, we mean faithful to my personal preferences about the law, apparently, not what's written on paper and what the words say. That's not of any interest. So, how are they attempting to legally get around this requirement that this money be spent as Congress dictated? Well, you see, there's a process available to the president if for some reason he decides that he doesn't want to send money to a foreign country. Things happen after all, and sometimes a friend can become a foe. And another quotation, I guess, probably from the Politico piece. The White House is allowed to send Congress a clawbacks request and then withhold the cash for 45 days while the lawmakers consider whether to approve, reject, or ignore the proposal. Clawback is informal terminology here. We're talking about rescissions, right? If the Congress appropriates money in an act of Congress, it passes both houses, gets sent to the president, signed by the president, or, for that matter, not signed by the president, 10 days pass, as long as it's not actively vetoed. And we're not within whatever number of days of the, if Congress doesn't adjourn, sine die before the president takes action. If you really want to include that, that's the pocket veto. If you want to include that among your options, which is not applicable here. But the Congress appropriates money, passes both houses of Congress, becomes a law. The president is, in the view of the last 250 years anyway, obligated to spend that money as appropriated because he needs to take care that the law be faithfully executed. But if he does, for some strange reason, either disagree with it from the beginning or change his mind about it, what can happen? Well, it's the congressional power that directs the spending here, not the presidential power. So the president's power is limited, but what he can do is say, I am asking you to reconsider. I would like you to consider a rescissions bill withdrawing the appropriation of that money, taking it off the table. Will you do it? Now, I can freeze the money for 45 days so that it's not spent while you guys decide whether or not you are willing to change your mind as I've asked you to do. That's it. But the money gets frozen. So Trump, in his view, well, the money can be frozen. I can do that. So it can be done. So it can be done forever. You can delay anything. Or I don't understand what rescissions are. So I want to be able to tell you, I need you to change your mind. And if you don't change your mind, I'll just freeze the funds. I'll just direct the Treasury, because unitary executive, don't spend that money. But, sir, that will put me in opposition to the Congress's lawfully determined appropriations. I'll be violating the law. Don't worry. I'll protect you. Could be up to a pardon. Could be just, we're not going to allow them to press charges against you. We're going to direct the DOJ not to pursue the case if they want to make a criminal referral against you. Whatever level of response seems appropriate. But in the meantime, it's going to be me saying, I am not limited to 45 days. I am not limited to asking you to make a rescission bill. I can just do the thing I want to do. No, you can't. Well, prove me wrong. Well, you have to do that in court. Well, I might kill your family. We'll see how things go. Okay. So anyway, the proposal or the procedure that's laid out, rescissions, is, as he says, a reasonable one. And if Congress agrees with the administration that certain foreign funds should no longer be spent, then there's no disagreement and no problem. But this is $4.9 billion worth of money spanning multiple countries with no showing of cause or itemized rationale. Congress is unlikely to go along with at least all $4.9 billion, I would say. The administration says that's of no concern to them. Another quote, I guess, from Politico. Because there are less than 45 days left before the end of the fiscal year, there are in fact 29, Trump's top budget officials, led by budget chief Russ Vought, argue essentially that there's a parallel to the pocket veto, the pocket rescission. They argue that they can employ the so-called pocket rescission to withhold the funding until it lapses at month's end, ensuring its cancellation regardless of what Congress decides. You see, he explains, they'll ask Congress to approve their decision, but since the clock will run out during the grace period, Congress has no opportunity to make a decision one way or the other. Since this may be removed from the Government Accounting Office's website at any moment, I am going to take a screenshot. It is a picture of What is a pocket rescission and is it legal? Posted on August 6th, 2025. The conclusion you can draw from the fact that Booman thinks it will possibly disappear from GAO's website is that they do think that a pocket rescission is illegal. So we got to get rid of the evidence of that as soon as possible. We'll see. Well, I'll click through to the link and we'll see whether it's still there. So far, so good. It's still there. The GAO says, you may have heard of a pocket veto, but maybe not a pocket rescission. In both cases, timing is key, but unlike pocket vetoes, pocket rescissions aren't allowed. As we approach the end of the fiscal year, September 30th, we have received more questions about pocket rescissions. Today's Watch blog post answers some of the more common questions that we get. For instance, are pocket rescissions legal? Answer, no. A pocket rescission is illegal, as we explained in our most recent decision on pocket decisions with a rescissions with a link included. Congress holds the power of the purse, approving a budget and appropriating funds. Presidents and executive branch agencies are responsible for administering those funds. A pocket rescission could allow a president to avoid spending the money regardless of whether Congress approves a rescissions request. This would cede Congress's power of the purse by allowing the president to, in effect, change the law by shortening the period of availability for fixed period funds. The Impoundment Control Act does not provide that authority. If Congress wanted a president to have that authority, it would need to change the law. Question at the end here posed by Booman, do you see the problem here? Well, you should. And if you don't, well, I don't know. But yeah, essentially, I mean, I guess one of the parts that's missing here in this discussion is the issue of funds appropriated by annual appropriations bills. If they are, the theory here is that if the president drags his feet long enough and the fiscal year expires and the money hasn't been spent, that the authority to spend it expires with the end of the fiscal year. It disappears. If it hasn't been spent, it's not going to be spent. You could spend the same amount of money later in the next appropriations bill. But once your authority to spend it under this annual appropriations bill expires, you're done. Well, normally that's the case. If an agency fails to spend the money that's been appropriated for those purposes without any other agreement to the contrary, you've got that claim that money reverts to the Treasury. It can be reappropriated, but that's at least the agency's action. But, of course, the president can then direct agencies to drag their feet and not spend that money in contravention to what the Congress has directed. And that's problematic, and most of the cases on that subject have been lost. But there is grounds to understand, there's reason to understand that money appropriated within an annual appropriations bill that doesn't get dispersed, there's a problem with it. And can you disperse it later on? There have been instances in which that has been held to be the case, but they particularly involve agencies having explained to Congress what the difficulties are, and Congress not necessarily rescinding that money, but understanding and forgiving the failure to execute the law as written, if a proper explanation is given in hearings and the like, but never that it is the president's ability to direct that feet be dragged and then so that there's no legal basis for failing to spend that money, and then waiting until most of the fiscal year has passed before actually coming up with a rescissions request, and then dragging your feet on the rescissions request such that you find yourself within, if you're allowed to freeze funds for 45 days, then so long as there's less than 45 days left in the fiscal year, that's essentially a pocket rescission. No, it's a new invention. It doesn't exist. I see why they think they might be able to try it, given that the pocket veto has worked, but this is a new one. The veto, at least, was within the president's prerogative in the Constitution. Everybody knows the Constitution affords the president the chance to veto a bill, but there's nothing in the Constitution about rescissions. They're allowed. There's nothing in the Constitution that says the president can't ask for rescissions, but he can't direct rescissions. And the fact that there's not enough time left in the fiscal year doesn't change that. So what do we have from the Hill on this subject? What to know about Trump's pocket rescissions. Brett Samuels wrote the piece also on the 29th. Trump is using a tool known as a pocket rescission, which isn't a tool and isn't known as anything because it doesn't exist, to unilaterally cut roughly $5 billion of congressionally approved funding, sparking bipartisan pushback on Capitol Hill. The rare move, it's not rare, it's just not a move, which Trump announced in a letter sent to Speaker Mike Johnson late Thursday, is the latest step by Trump and his team to test the bounds of presidential authority and to root out what officials say is wasteful spending that does not align with the president's agenda, which is the definition in his mind of wasteful spending. Here's what to know about Trump's attempt to claw back funding. What is a pocket rescission? It isn't a thing, so there's no answer to that. The Impoundment Control Act lays out rules governing the rescissions process. It allows the administration to temporarily withhold funding for 45 days while Congress considers the rescissions request. If lawmakers opt not to approve the request, the funds must be released. But a pocket rescission, they're claiming, is a thing, and this is the thing they claim it is. A pocket rescission is when the president sends the same type of request to Congress within 45 days of the end of the fiscal year. The request is made so late that the funding is essentially paused until it runs out at the end of the year, regardless of congressional action. The tactic has not been used since then President Jimmy Carter did so in 1977. And you may recall that we spent the decade or so following, or maybe 2 decades following 1977, trying to come up with an alternative and constitutionally sound substitute, which tended to be, first they pushed for a line item veto and then an enhanced rescissions authority, but never a pocket rescission. The Trump White House earlier this year submitted a rescissions package to Capitol Hill that targeted a total of $9 billion in funding for global aid programs and the Corporation for Public Broadcasting, which funds NPR and CBS. Republican lawmakers approved that request, and Trump signed it into law in July. What funding is Trump targeting now? White House is seeking to claw back $4.9 billion in funds for the State Department and USAID, which the Trump administration has aggressively dismantled. A White House official said $3.2 billion of the rescission would target USAID to effectively shutter the agency. Some of the funding outlined in the rescissions letter Trump sent to Capitol Hill includes money for global climate projects and gender equality programs in other countries. The announcement also targets $393 million in spending toward contributions for international peacekeeping activities, which goes toward UN-aligned programs, as well as millions of dollars in other peacekeeping programs that are connected to the UN. Now remember, he's stopping 10 wars. Why not fund peacekeeping? I don't know. Some lawmakers are pushing back. That's good news. The White House's maneuver was greeted with skepticism and frustration from some on Capitol Hill, particularly in the Senate, where lawmakers have been less willing to cede congressional authority to the White House. Instead of this attempt to undermine the law, the appropriate way is to identify ways to reduce excessive spending through bipartisan annual appropriations. Congress approves rescissions regularly as part of this process. Senator Susan Collins, who's deeply concerned, says in a statement, Senate Democratic leader Chuck Schumer called the move a rejection of bipartisanship, but, also the Constitution, when government funding runs out at the end of September. Today's announcement of the administration's plan to advance an unlawful pocket rescission package is further proof President Trump and congressional Republicans are hell-bent on rejecting bipartisanship and going it alone this fall, Schumer said in a statement. But, why not mention the Constitution? Elizabeth Warren accused Trump of illegally ripping away bipartisan funding approved by Congress. Republicans can't be trusted to honor a budget deal when they're rigging government funding, Warren posted on Twitter. But a White House official downplayed the suggestion that they were poisoning the well on bipartisan appropriations negotiations ahead of a key government funding deadline. Sure, why not reject that? Democrats are going to give you a line that says that this will keep us from ever being able to get a deal in Congress, and that's not true, the official said, whoever it might be. There have been rescissions before. There have been pocket rescissions before. Well, there were some in 1977, and everybody rejected it. I don't know whether there's ever been a successful pocket rescission or not. The White House defends the legal footing. Some lawmakers, including Collins, have argued that the Government Accountability Office has determined that the use of pocket rescissions is unlawful under the Impoundment Control Act. Article 1 of the Constitution makes clear that Congress has the responsibility for the power of the purse. Any effort to rescind appropriated funds without congressional approval is a clear violation of the law, Collins said. But we actually hope we never hear from Collins ever again. But she's right there. The White House, though, is prepared to defend its theory of the case should the GAO rule against the move. A spokesperson for the Office of Management and Budget said the GAO previously provided recommendations for how Congress could amend the law to prevent future pocket rescissions, but because no amendments were made, the spokesperson said, it remains a lawful tool for the executive branch. The Impoundment Control Act is not something that we're huge fans of, but we have been encouraged by Congress to use the Impoundment Control Act to send up rescissions, in this case, a pocket rescission, the White House official said. Well, they sent it with the intention that it become a pocket rescission. Actually means sending it and then winking at Republicans and saying, don't vote on this thing, even if you find time in the next 30 days. So they say, we're on very firm legal footing, and we will be making that case. And I think, of course, if they do consider this, I guess the Supreme Court, will decide along the lines of whatever we've articulated, the official said. All right. Well, very dubious, but of course, this could be a matter of finding out that we've been wrong the whole time. And actually, this idea of the separation of powers is a stupid one, and let's get rid of it. All right. Does everybody agree that could be a thing? Yeah? Okay, great. Then we're all on the same page. Politico, as I mentioned, had also written about it and was quoted extensively in Booman's piece. White House declares $4.9 billion in foreign aid unilaterally canceled in end run around Congress's funding power. The administration is setting up a clash with Capitol Hill over its use of the, quote, pocket rescission. I don't know if there's anything else that we need or can distill out of the Politico piece that wasn't selected out by Booman. But yeah, I don't know. I mean, it's just another one of those things where it's a really ridiculous interpretation that they're putting forth, but it's so crazy it just might work. If the Supreme Court says everybody's understanding of the appropriations process is just wrong, we didn't have reason to tell you before now, but that's all there is to it, you're just wrong, then golly, I guess we just have to sit there and take it. Anyway, let's see. Maybe a good addition, we're limited on time here, to the end of the show might be another piece of news from over the weekend, and I guess toward the end of the weekend. That was, just from yesterday, a guest essay in the New York Times, perhaps you've heard of it, small regional publication, from the former directors of the CDC across multiple administrations. We ran the CDC, Kennedy is endangering every American's health. Wow, what do you know? And widely shared, and so probably ought to be put on the record here, the names who are on the byline, I don't know how to pronounce any of them, but William Foege, F-O-E-G-E. I don't know, when was he the CDC director? William Roper, David Satcher, Jeffrey Copeland, Richard Besser, Tom Frieden, Ann Schuchat, maybe, Rochelle P. Walensky, and Mandy K. Cohen get bylines on this. The authors previously led the CDC as directors or acting directors. What kind? That's right, acting directors under Republican and Democratic administrations. And so therefore credible, bipartisan, because if it was just Democrats, something, you get the point. Well, at any rate, this is the way they put it. We have each had the honor and privilege of serving as director of the Centers for Disease Control and Prevention, either in permanent or an acting capacity, dating back to 1977, which was, of course, the last time we heard about what? Pocket rescissions. Right. Not related, I don't think, but if you want to tie it back to a previous subject, why not? We'll hinge it on the year. Collectively, we've spent more than 100 years working at the CDC, the world's preeminent public health agency. We served under multiple Republican and Democratic administrations, every president from Jimmy Carter to Donald Trump, alongside thousands of dedicated staff members who've shared our commitment to saving lives and improving health. What the Health and Human Services Secretary Robert F. Kennedy Jr. has done to the CDC and to our nation's public health system over the past several months, culminating in his decision to fire Dr. Susan Monarez as CDC director just days ago, is unlike anything we have ever seen at the agency and unlike anything our country has ever experienced. Mr. Kennedy has fired thousands of federal health workers and severely weakened programs designed to protect Americans from cancer, heart attacks, strokes, lead poisoning, injury, violence, and more. And by the way, we're entering flu season. Amid the largest measles outbreak in the United States in a generation, he's focused on unproven treatments while downplaying vaccines. He canceled investments in promising medical research that will leave us ill-prepared for future health emergencies. He's replaced experts on federal health advisory committees with unqualified individuals who share his dangerous and unscientific views. He announced the end of U.S. support for global vaccination programs that protect millions of children and keep Americans safe, citing flawed research and making inaccurate statements. And he championed federal legislation that will cause millions of people with health insurance through Medicaid to lose their coverage. Firing Dr. Monarez, which led to the resignation of other top CDC officials, also adds considerable fuel to this raging fire. We are worried about the wide-ranging impact that all these decisions will have on America's health security. Residents of rural communities and people with disabilities will have even more limited access to health care. Families with low incomes who rely most heavily on community health clinics and support from state and local health departments will have fewer resources available to them. Children risk losing access to life-saving vaccines because of the cost. This is unacceptable, and it should alarm every American regardless of political leanings. The CDC is an agency under the Health and Human Services Department. During our CDC tenures, we did not always agree with our leaders, but they never gave us reason to doubt that they would rely on data-driven insights for our protection or that they would support public health workers. We need only look to Operation Warp Speed during the first Trump administration, which produced highly effective and safe vaccines that saved millions of lives during the COVID-19 pandemic as a shining example of what the Health and Human Services Department, they put it that way, can accomplish when health and science are at the forefront of its mission. The current department leadership, however, operates under a very different set of rules. When Mr. Kennedy administered the oath of office to Dr. Monarez on July 31st, he called her, quote, a public health expert with unimpeachable scientific credentials, unquote, although he said probably public health expert with unimpeachable scientific credentials. But when she refused weeks later to rubber stamp his dangerous and unfounded vaccine recommendations or heed his demand to fire senior CDC staff members, he decided she was expendable. These are not typical requests from a health secretary to a CDC director, not even close. None of us would have agreed to the secretary's demands, and we applaud Dr. Monarez for standing up for the agency and the health of our communities. When the CDC was created in 1946, the average life expectancy in the United States was around 66 years. Today, it's more than 78 years. While medical advances have helped, it is public health that has played the biggest role in improving both the length and quality of life in our nation. The CDC has led efforts to eradicate smallpox, increase access to life-saving vaccinations, and significantly reduce smoking rates. The agency is also on the front lines in communities across the country, delivering crucial but often less visible wins, such as containing an outbreak of HIV cases in Scott County, Indiana. Did you hear about that one? No, because it worked. And protecting residents in East Palestine, Ohio from toxic chemical exposure. They do have that different pronunciation for it, don't they? Is that the one? I don't know. The CDC is not perfect. What institution is? But over its history, regardless of which party has controlled the White House or Congress, the agency has not wavered from its mission. To those on the CDC staff who continue to perform their jobs heroically in the face of excruciating circumstances, we offer our sincere thanks and appreciation. Their ongoing dedication is a model for all of us, but it's clear that the agency is hurting badly. The loss of Dr. Monarez and other top leaders will make it far more difficult for the CDC to do what it has done for about 80 years, work around the clock to protect Americans from threats to their lives and health. We have a message for the rest of the nation as well. This is a time to rally to protect the health of every American. Congress must exercise its oversight authority over health and human services. State and local governments must fill funding gaps where they can. Philanthropy and the private sector must step up their community investments. Medical groups must continue to stand up for science and truth. Physicians must continue to support their patients with sound guidance and empathy. And each of us must do what public health does best. Look out for one another. Oh my God, they're a bunch of communists. The men and women who have joined the CDC across generations have done so not for prestige or power, but because they believe deeply in the call to service. They deserve a Health and Human Services Secretary who stands up for health, that'd be nice, supports science, and has their back. So too does our country. There you have it. All got onto the record. And now time to hand things over to Justice Putnam, of course, for his version of what has happened over the long weekend on the West Coast Cookbook and Speakeasy, coming up next right here on Netroots Radio. Let's see if we can't squeeze in what's tops on his agenda for today.
Netrootsradio.com. You have been listening to Kagro in the Morning with David Waldman.
Hey, we probably should have made mention of this. World leaders are furious at Trump, not just because he sucks, but after Russia's attempt to assassinate European Commission President Ursula von der Leyen in a GPS jamming operation that forced her plane to land in Bulgaria. We didn't even get to that. Thankfully, justice does. We'll see you tomorrow.